Hello, I'm Ant Joblin and welcome to Pink Diamond, the show that digs deep into the pink sheet and small cap markets to find diamonds in the rough. Today we're taking a look at a company well known throughout the media industry, Foundry. The Wisconsin firm was founded in 1991 and provides enterprise solutions and services for corporations, educational institutions, and government agencies worldwide. Its principal product line, MediaSite, is a webcasting and video content management platform. $27.8 million market cap company sells its products through system integrator, consultant, and reselling channels, as well as direct sales. In August, Foundry released its fiscal 2020 third quarter results, which saw the firm bill $7.7 million in Q3 2020, bringing total billings for the year to $24.3 million, $300,000 ahead of last year. Its total revenue was $7.9 million compared to $10.1 million in Q3 2019, and they have $24.6 million in total revenue for the year to date compared to $25.6 million last year. Foundry's gross margin remained consistent at 73% for the third quarter in both 2020 and 2019, while net income improved from minus $0.03 per share in Q3 2019 to $0.01 per share for the same period this year. Adjusted EBITDA is $353,000 for Q3 2020, bringing year-to-date adjusted EBITDA to $767,000, which is $2 million ahead of last year, a great development. However, due to supply chain interruptions caused by COVID-19, product billings were $2.5 million during the third quarter of 2020 compared to $4 million in the same quarter last year. Service billings, including support, hosting, events, and installs, were $5.2 million compared to $6.5 million in the prior year. Events billings were negatively impacted by cancellations due to COVID-19. The company expects to recognize $4.6 million of the current unearned revenue in the fourth quarter of fiscal 2020. Recurring revenue of $5.6 million was 70% of total revenue in the third quarter of 2020, compared to $6.3 million or 63% of total revenue in the third quarter of 2019. In August, the board of directors unanimously elected a new CEO for the firm, Joe Mosden, who starts on September 14. Mosden most recently served in executive management roles at DeVry University, focusing on developing and implementing innovative e-learning revenue growth strategies by engaging a new corporate client base, delivering new services, and expanding overseas. So, in summary, a mixed bag of data with some gains but with noticeable COVID-19-led declines, leading to a pullback in share price during what was shaping up to be a solid year of gains. Looking at the charts, we can see that the stock started the year trading around the $1 level, where it has been trading in and around ever since the start of 2019. Despite the pandemic, the stock gained during the lockdown period to boast a 2020 high at $5.23, a level it hasn't traded at since 2017. The $5 level has seen stiff resistance, with the stock failing to break higher despite several months of testing. After 3 attempts to push higher, combined with patchy earnings, we saw the stock pull back to where it is trading around $3.50 per share. Momentum has dipped to oversold territory, and the 200-day moving average is close to adding direct support to price action. All in all, this pandemic-proof stock is worth keeping an eye on, and its pullback may well prove to be technical rather than anything deeper. As usual, make sure you do your due diligence before making any investment decisions. Stay safe and see you next week.